Welcome back to the channel, and if this is your first time here, don't forget to hit the subscribe button, turn on the notification, and keep watching. Okay, welcome to class today. Today our topic is the ultimate entry strategy, and that's what we'll be looking at today. So first, what was this strategy all about, and what are the possible stuff we'll be looking at today in today's class? First, under this strategy, we'll be looking at number one, multi-time frame analysis. Number two, supply and demand. Number three, zone refinement. And the last one, we'll be looking at confirmation entry. Looking at multi-time frame analysis, let's go down to looking at the sketch work now before we look at the main chart. Let's go. So talking about multi-time frame analysis, let's assume we are working with 1 hour, because from 1 hour we'll now refine to maybe 30 minutes or 50 minutes. I don't want to go through the weekly, daily, and all of those things, but let's just assume we're working with 1 hour as our main trend or our main outlook of the market. So let's assume we have something like this. You have a bullish trend. Market come back, give you an inducement, push up before coming back to this other zone. Now when it comes to this zone, you don't want to enter using aggressive entry. You want to wait for like a confirmation. So you wait for market to kind of give you like a shift. Market come back, give you a change of character on the smaller time frame, come back to this zone before what? That's why you not take a trade, and this will not be your target. So that's what this whole entry strategy is all about. So now let's take our first example, looking at the main chart and what it looks like on the main chart. Let's go. So here we are on a USD JPY on 1 hour time frame. So first, we will look at what the market was doing and what we were supposed to do when the market came to our point of interest. So at first, this market was coming down. We had the market coming down this way. Price took out this leg at this point. Gave us another up this thing, coming back down and giving us what? A change of character at this point. So after price gave us this change of character on the 1 hour time frame, you notice what? Price at the upside at this point here. Now let's look at what we'll have done differently if we were to use entry confirmation for this particular chart work. So this was our last low at this point. This was the last low at that point. And what? This was our last high at this point here. So on the 1 hour, price gave us what? A change of character. We had a change of character at this point, and we had a break of structure here. All we have here is what? Our inducement. This was our inducement. And where is our order block? This is our order block. So this would have been our order block. So I have to refine this chart down to our 15 minutes to actually what? Get the best out of this zone. Go back down to 15 minutes because we don't want to enter immediately price returns back to this zone. We want to use what? A confirmation entry, and that is what puts you at a better end, because using an aggressive entry, the market can decide to come back to this zone, and this zone will be swept out or used as what? A liquidity. So we want to see that, okay, market gives us a confirmation on a smaller time frame, and that validates that what? This zone is going to hold or it's not. So with the entry confirmation, we'll be able to identify that the zone is going to probably be a solid zone we can take our trade from, giving us what? A higher win rate. Let's go down to 15 minutes time frame. If we go to our entry time frame here, let's look at what price gave to us at this point. This was the last low we had. This was the last low, and market what? Took out that low, and this was the last high. This was the high that took out what? That low. This was the high that took out that low. Now, what are we expecting the price to do? At this point, we have this order block lying here. This is our order block on the 15 minutes. We had what? We have our break of structure at this point. This is our break of structure. That was our change of character. And here, this is our break of structure. At this point, we have our what? We have our inducement here. And what we have, lastly, we have our fair value gap at this point. We have our fair value gap. So with all of this in place, what are we expecting now? Don't forget, this is the high we are trying to target. That's our possible target. So we'll pull this order block all the way here. Okay, that's right. So we'll pick our what? Buy order at this point. Yes, stop loss, not right below the low, because what market can come for that low. So you put it slightly below the low. So we can work with, okay, this is like a 21 pips. So at least we should be targeting at least minimum of at least 1:3. So if we are going with 1:3, at this point, we should be out. But since we are targeting this high, this is like a 8.4. So it's a 1:8.4. So if you look at it, you see the way the price played from our entry all the way down to what? TP. So at this point, TP smashed. So this is the advantage of trying to or working with an entry confirmation. It gives you a better win rate, giving at least possible 1:10, possible 1:5, and all of that. Now, with this strategy, you are able to win. Let's assume you are working with you basically trade 1:3, let's say minimum of 1:3, and you lose like 3 trades. At least winning one trade gets to put you on what? Break even. And if you're able to win, let's say 2 trades, you're already up with what? 3% on your account. So that's the what? Best way to always take your trade. And with this strategy, I promise you, you are going to do massively well on your account. So what? Keep winning, stay tuned. So see you next time in our class. Do well to what? Hit the subscribe button, turn on the notification bell, and leave a comment for us. Also do well to what? Drop your topics or any topic you want us to treat in our next class in the comment section. Bye and thank you for watching. Stay blessed.